Hi everyone, this is Rob Royan. Welcome to the Elliott Wave Options U.S. Market Update. Well, interest rates have backed off a little. Cannabis has chilled out a bit, and the market has just basically treaded water. Let's take a look at the charts. If you're new to the channel, don't forget to drop us a like and subscribe to be notified every time we upload a new update. At the time of this recording, it is 12:45 a.m. Eastern Time on Tuesday night / Wednesday morning. Currently, the futures are up 15, so we'll see if that holds into the open. Looking at the chart of the SPY, you can see, yep, there it is. That same zigzag pattern that you've seen enough times you could draw it in your sleep now. But here we are with the market, and in the intro I said, basically the market's just treaded water. Well, what do you do when you tread water? Well, your arms move a lot, right? Thrash around, pretty violent, volatile movement with the arms, but you go nowhere. Well, that's exactly what's happened with the chart. Here's where we closed at the last recording after the 23rd at 387.50. Well, here we are after today's close at 386.54. So within a point of where we were a week ago. But look, a lot of intraday volatility. So the market's been doing a lot intraday, a lot of volatility, but really we've gone nowhere. Still bouncing around that 381 level, that 100% C wave extension. Trying to see if we can break above this area here of the recent 5. Now when we take a look at the 10-day moving average, you can see that yesterday we had a pretty big day. First trading day of the month. That's when a lot of new money goes to work with institutions, mutual funds, etc. So having an up day didn't mean a whole lot. I'd actually posted a note to our subscribers saying the futures are up, but the important thing is can they hold into the close? And they did and rallied into the close. So having such a big day yesterday, one of the best days in a long time, wasn't surprising to see the market back off a little bit. Would have liked to have seen a little bit of a follow through, a higher close, but backing off a little was okay. Was a little disappointed to see at the end of the day we sold off and closed below that 10-day moving average. You can say, well, it's pretty close, but would have preferred it to hold above there to give us a little bit better signal that we may be getting ready to break above that previous wave 5 high and head up to that 161.8% extension at 420 that we've been talking about for quite some time. Well, maybe let's take a look at the weekly chart. Remember, follow the higher degree with Elliott Wave. We're looking at the weekly chart of the SPY. Looks pretty solid. As you can see here, a little doji there, but you know, it's only two days into the week, Tuesday, so a lot of things can happen between now and the end of the week, but the chart looks pretty good. And then we put on the DMI, and you can see that the ADX is still strong. Positive directional indicator has been dropping a bit, though. Want to see that turn around, but doesn't look too bad for a continued move back up to, look at that. Look at where the wave 5 projection is, 420. Hey, where have we seen that number before? 420. 161.8% C wave extension. It's always interesting when more than one Elliott wave pattern gives you the same target. Well, speaking of 420, let's take a look at THCX, cannabis stocks. You can see here that they have chilled out a bit, as I said in the intro. In fact, we're getting a little bit of a triangle forming here. Looked like we were going to break out today. Caught a bid on the open and traded higher on the news that Virginia was poised to legalize marijuana. A lot more states are expected to follow suit, but it couldn't hold it. So we closed right back down into the triangle, but a good wave 4 there at 53%. Let's look at the DMI. You can see the ADX is coming back down. It's dropped below 40, so that tells you that that strongest part of the other move, or the wave 3, was done. So that's been confirmed with this consolidating triangle here in the wave 4. So the key is, where do we break from here? Likely we break to the upside towards that wave 5 target, but the question is when? Well, with the looks of that triangle, not too distant future, but it doesn't bode well that had a breakout attempt today that didn't hold. Going over to the 10-day, also mentioned in the intro, interest rates have backed off a bit. We talked about that in the last recording, that interest rates had gone vertical. They needed to calm down. Well, look at the chart of the 10-year here, the TNX. You can see that, and I've noted this many times in the past, that certain securities just seem to go through a process of consolidation, breakout, consolidation, breakout. Well, it looks like maybe we're starting to form a little bit of a triangle here as well. It's not well formed and it's not very large, but looks like some consolidation there with where we are, which is what interest rates needed to do. So calming down a little bit. Interest rates got above 1.5% on the 10-year. That's still historically incredibly low. It wasn't that was causing some concern with the market. It was the velocity, how fast it was going to the upside. Nobody knew when it was going to end. So that caused a little bit of confusion in the market at the end of last week, but that settled itself down. And looking at the 30-year, we have almost the exact same chart. You see back here with a triangle in September at the beginning of this wave 3, another symmetrical triangle, another one, a little bit of a descending triangle on the way up, and the 30-year is also doing some consolidation and forming a little bit of a small triangle. So some sort of a directional breakout move from interest rates is due. So do we break down and form these wave 4s, or do we break here and continue on the wave 3s? I don't think we're gonna have to wait too long to find out. Looking at the dollar, you can see this zigzag pattern. While I'm talking about zigzags, don't forget to sign up for our Zig-Zag Mastery class if you haven't. It starts next Wednesday, so it's not too far away, and there's only a couple spots left, and that's not BS. There literally is only a couple spots left, but we're going to take a deep dive into my favorite directional pattern, zigzag. So love to have you view along with us. So here with this zigzag pattern, you can see we were talking about in the last recording the potential for maybe an extended C wave down to the 161.8% level, especially if we got some Fed intervention. So did the Fed intervene with interest rates, or was it just the fact that they were overbought? They went too vertical and needed to contract a bit. Doesn't look like there really was Fed intervention at this point in time, especially with the fact that the dollar has rebounded. That could have easily weakened the dollar, significant Fed intervention, and pushed it down to that 161.8%. But instead, the dollar is going back up and looks like it wants to test this recent wave 4. So a little bit of strengthening in the dollar. So a little strengthening is good for the market. It signals a getting stronger economy. Interest rates weakening a little bit, that's good, but elevated a little bit. So we're starting to get into a little bit of a sweet spot here where we could really see the market make a run to that extended C wave level. Now let's take a look at Bitcoin. Now Bitcoin, really interesting. In the last recording, we talked about how we were starting to form what looked like an expanding triangle. Well, remember we had this, we talked about it, this really nicely formed symmetrical triangle here. Then we broke out, and now we have an even better formed or more well-formed expanding triangle in Bitcoin. So right here at the wave 5. So broke out of the contracting triangle right into forming an expanding triangle. Got there a little bit early to its wave 5 target, but this is normal. I mean, we went right to the wave 5 target, and we're going through consolidation. That's exactly what needed to happen with Bitcoin. We take a look at the DMI and to see if there's strength. Note that the ADX has continued to come down. Now the last time, and this is key, the last time the ADX broke below the 40 level, came down here, we took off on another run. So we're now breaking down below 40 again. You can see right here, we're starting to break below 40 once again. Now is that going to signal an upward breakout out of this expanding triangle and Bitcoin go on another run? Sure, looks like it could very well be what happens. So one of the two scenarios is likely. We break out and go to a new high, or we come back down because we only had an 84% wave 5 extension. That would mean the corrective move would come back down to the previous 4. I don't think we're going to have to wait too long on Bitcoin either. So we've got a lot of triangles. Hasn't a whole lot happened from the time I talked to you last week to this week, but I think that's going to be different in the next recording. A lot's likely to go on. Wanted to share with you something that I shared with our alert subscribers at Elliott Wave Options. EWOtrader.com is our website. An area of monetary rotation. There is definitely a rotation going on. Some of the big tech leaders, a few of them I think will still do okay, but I don't think they're going to be the leaders on the move back up to that 161.8% level if the market indeed breaks higher from here. Value is a good place to be, and you can see that this is hung in there pretty well. Not a little bit, but not quite the volatility that the S&P had. And note that the wave 5 is only extended 103%. This is the Vanguard Value ETF. We come back over here, remember the SPY has a wave 5 that's extended 123%. So a little bit of underperformance here. Could be a place where money goes to find itself moving forward in this next move higher. Again, if that is indeed the way the market breaks. Look at this DMI. Looks pretty good for a move higher. The ADX is kind of breaking up. Good separation between the two directional indicators. A little bit of a pause there in the positive directional indicator, but the negative directional indicator went down as well. So really not a changing of the guard, if you will, between buyers and sellers. Just a little bit of a pause here with, yep, you see it, another small little triangle here, getting ready for some sort of breakout out of this value ETF. Last but not least, as we always do, let's take a look at the VIX, and you can see that level held again right in this area from 22 to 20. Has just been a solid floor for the VIX. Every time we get down here, it bounces back to the upside. It did it again, made a lower high this time, at least for now, and that's a series of boom, boom, boom regarding lower highs, and that could be could bode well for a continued move to the upside in the market as well. So hope you've had a great week. Be back to talk to you again next week. If you like this, please don't forget to hit that like button, or better yet, hit subscribe, and you'll be notified immediately when one of these videos is posted. Where do you think we go from here? The market's just treaded water. Tell me, leave a comment. Love to hear from you. Talk to you soon. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.